Folks, you better buckle up and get ready because today we're going to go through the top 3 stocks right now. Each of these stocks has a ripe setup, a clear catalyst, and or a clear reason to be bought. And the only thing I ask of you in return is that you hit that ravishing like button and also don't forget to subscribe. And as always, make sure to do your own due diligence on all ideas presented here on the channel. If you're the one taking the ultimate risk, you got to be the one doing the ultimate frisk. And quick plug, I'm excited to announce our Memorial 50 sale on ZipTrader U. ZipU membership includes our step-by-step lessons, our private chat, and our daily morning briefings. And right now is a great time to have the ZipU briefings. For example, some recent winners include FFIE, which we briefed on at about 58 cents in the pre-market on May 15th, which was last Wednesday. It ended up running about 572% briefing price to highs. In terms of our GME and AMC briefings last week, well, we briefed on AMC at about $3.36 and it ran to $13.30, a run of about 294% briefing price to highs. We briefed on GME at about $24.26 and it ran to $80, a run of about 229% briefing price to highs. So anyways, if you'd like to be on the front page every single time we find catalysts in the morning and you'd like to be a member, well, make sure to click that link down below and use coupon code MEMORIAL50. And by the way, ZipU and Zip Options are two completely different programs. Coupon code MEMORIAL50 is on for both. Check them out down below. If you want to be a stock trader member, ZipU. If you want to be an options member, Zip Options. Okay, let's go ahead and get to work. So number 1, top stock today is Mara. Lovely Mara. Now, Mara has long been our highest conviction crypto miner, and she's been following an uptrending channel trajectory for over a month now. And this is incredibly relevant because she still has far to climb to fill in the gap to her most recent cycle highs at $34.09. At the same time, as she rallies, it puts pressure on her substantial short interest. According to Fintel, short interest is at just under 22%. And if you go back to her most recent earnings report, she's certainly earning conviction right now. A few highlights: her energized hash rate increased 142% to 27.8 exahashes per second. And Mara increased her year-end target to about 50 by the end of the year. So that's a substantial scaling up. In terms of Bitcoin production, she produced a 28% increase from Q1 of 2023. And I think that was a little bit underballing it because they had some issues with their overall infrastructure that had to do with weather and so on and so forth. Nonetheless, revenues increased 223%, net income increased 223%, adjusted EBITDA increased 266%. And with the scaling up of the hash rate, you should continue to see these numbers scale up as well. But what about Bitcoin, the coin of Bit Charlie Toe? Well, Bitcoin's uptrend has returned and we're flirting just under all-time highs. All-time highs are at $73,835, and that was reached in mid-March. I expect we plow through those within the next 2 weeks. Why is that? Well, because historically that's what's happened after halving. You get rallies into halving and then maybe you get a slight dip after halving, but then you tend to see Bitcoin continue to pump in the aftermath, and we've been prepping you for this since December. If historical patterns repeat, Bitcoin could easily pump to 90K or 100K before its next large correction, which would have the impact of driving Mara up to her own new records before said correction. Now, sometimes I'll read comments from folks that are like, Charlie, how can you talk about Mara when she's at a new all-time high? How can you talk about Mara when she's falling? Doesn't that mean that you're recommending people to look at Mara when she's already way too pricey or when she's a falling knife? Well, folks, you got to remember, we all know that Mara teases, she squeezes, she teases, she squeezes. She goes like this, right? And that means she's an excellent trading opportunity. So here on the channel, when we're talking about Mara, we're talking about her because we have conviction in the long-term trend. So there's 2 different ways you can play Mara. You can either play her at really cheap prices and then just ride the long-term trend, or you can ride the up and down fluctuations. The game with Mara is simply discerning whether you want to get her at a good deal or whether you want to get her when momentum is brewing. Right now is one of those times where we have Mara trading at around middle of the ground pricing for the last 180 days, but she's also brewing momentum at some of the most consistent and healthy paces we've seen all year. And at the same time, the underlying thesis for Bitcoin going to new all-time highs is stronger and more relevant now than ever. Mara, in my view, is a top stock right now. She's an excellent buy right now if you are somebody that is a momentum trader. If you're somebody that's a little bit more on the buy and hold side, sure, a week or 2 ago would have been better. We made videos on Mara back then saying that she was great, but now is still an excellent time to buy her as a momentum trader, somebody that wants to ride to potentially new cycle highs. And of course, to have risk management if she poops out for whatever reason. Okay, number 2, GameStop, GME. So GME went parabolic last week after prominent meme figure Roaring Kitty started tweeting memes, and then towards the end of the week, it dumpy-dumpitoed out, erasing a large portion of its original rally. Now, there are a few clear causes of this dumpy-dumpito. Firstly, the original rally got dumped on huge in the pre-market of the 15th, which we discussed was a great time for shorts to damper the momentum because you don't have halts in the pre-market. And that's exactly what happened. They dampened the momentum just a couple days into trading. The uptrend was halted, but the downtrend not halted. That's what's so smart about dumping in the pre-market. But then shorts got further emboldened later on when GME decided to enter into an agreement to sell up to 45 million shares, which essentially means they can dump huge huge amounts of shares at any time, suppressing any future movements, and you just find out about it a little bit later after they've already done it. Now, as of this moment, it's unclear if, when, and how much they are planning to dump. However, the irony is that just before the offering, I made a video criticizing AMC for doing more offerings than GME has, and coincidentally, GME finally decided to join the dilution game itself. I'm pretty sure that dilution is going to lead me to an early grave, but nonetheless, it's still not an apples-to-apples comparison. GME has about 305 million shares outstanding, and this offering is for up to 45 million shares. If they dump everything, that's around 14 to 15% dilution. AMC, on the other hand, has had some 1,250% dilution over the last 5 years. And if you look at the float in the beginning of the overall meme trade for AMC and what it is now, I mean, it's been a substantial increase. And AMC still has been able to pick up some steam regardless of all this dumping. So GME's situation is much more conservative and much more likely to short squeeze still. So again, this idea that GME has been derailed by this offering or this ability to offer is just not the case. Even with this new filing, I mean, still, GME has been very conservative over time with dilution, and no way is this enough to kill a squeeze. The only question is whether or not this is enough to psychologically kill a squeeze and kill new retail traders' enthusiasm, and quite frankly, I mean, the courts are still out on that. But in order to understand the reinvigoration of enthusiasm for GME stock, you gotta go back to Roaring Kitty's tweets, and Roaring Kitty, of course, really brought in the volume to this trade with his tweets, but now he's gone silent, and as of the time of recording this video, he hasn't posted since May 17th. Now, why exactly has Roaring Kitty gone silent? Well, there's a few different ways to look at this. There's one insidious way, which is to say that perhaps he was looking for exit liquidity for his GME shares, and tweeting videos was a low-risk way of getting people excited about the stock, similar to how Musk tweets positive things about Tesla before his insider sales. But another reason, and one that I'm going to give him the benefit of the doubt on, is perhaps this was just a first round and he'll be bringing attention to it again. Maybe in a week or two, he'll be back and actually giving explanations for why GME is a relevant setup again. If he goes on a few media channels and explains his new thesis, or he just posts a simple YouTube video like he used to do, well, that could cause a whole new round of resurgence back into the stock with people that look at that previous resurgence from last week and say, even at these prices, if it just goes back to where it was last week at highs, that's a lot of moolah to be made. That said, I don't think a second round of random meme videos is going to be enough to really drive interest back into the stock, because you already saw that interest pooping out day after day after day. The original novelty pop after a couple years of no tweets was huge, but then all of a sudden people kind of got used to millions of tweets from him. But the thing is that this is way more than Roaring Kitty now, because Roaring Kitty woke up a sleeping giant, and now the rest of the market is once again focused and paying attention to what happens to GME, and GME is in a ripe situation where probably for the next week or two, lots of eyes are going to be on it, and lots of eyes are going to be waiting for the next rally, and once it gets just a little bit of a pickup, you're going to see a lot of people start pouring in again. The squeeze setup is hot as hell if that happens, and with everyday new folks like, for example, RFK Jr. tweeting awareness about the stock, well, all of a sudden you're going to get more and more people interested here. Okay, number 3, FFIE. FFIE is another stock that is cooling down from its huge squeeze rally of last week. FFIE is Faraday Future Intelligent Electric, and it's basically a startup EV company based out of California. For context, we originally briefed on this stock for ZipU members at 58 cents a share last week, and it ran about 572% briefing price to highs. Now, of course, we're in a hot, privileged market condition where we have huge squeezes, and that doesn't happen all the time, so you got to understand that. I'm a big believer in the idea that it's very important to check your market privilege. A lot of people walk around bragging that they're making all this money, but they don't realize that a lot of that money is coming from their market privilege. But virtue signaling aside, here's the thing. FFIE was a super hot short squeeze stock, and usually short squeeze stocks don't just have a week of uptrending and then a dump that kills the stock forever. Usually there's a first wave that starts driving awareness, then there's a second resurgence wave, and then you get the final biggest wave, which is the ultimate squeezer. With FFIE, I believe we got 1 or 2 waves left. So that means that right now, as we are continuing to dump quite substantially from cycle highs at $3.90, it's time to start really watching closely for a bottoming out. My guess is this stock bottoms out at around that support of 70 cents and then proceeds to hold there before bouncing and starting the next wave to the higher high. Could I be wrong? Certainly, but as traders, we must use historical precedents to help us predict future trends and then use risk management to guard against the errors in that strategy. Now, there is one catalyst for the stock that I believe almost guarantees that the stock remains relevant, and that is its coming earnings report coming on May 28th. Now, as a penny stock in a really high barrier to entry and capital expenditure heavy field, well, the earnings should just be awful, but the lead up to earnings provides ample opportunity for spec traders to trade off the anticipated heightened coverage, and that can drive volume massively, and all you need is some upward sentiment volume in the stock, and you start seeing the next round of a squeeze. Now, is this a buy and hold play? Absolutely not. If my worst enemy said, Charlie, do you think I should buy and hold this stock? I'd say, absolutely not. I am sorry, I don't like you, but dude, you shouldn't be buying and holding this stock. This is a momentum, spec, high-risk trade to ride the wave on, but also to employ huge risk management so that you can lock in your profits or cut your losses quickly if things go the opposite way. Anyways, folks, that caps off today's video. Make sure to let us know what your favorite stocks are in the comment section down below, and also make sure to take advantage of coupon code Memorial50 on ZipTrader U and or ZipTrader options. And we'll see you in the next video.